Hey everyone, hope you're doing well. Hope you're having a great day. Hope all is well. I wanted to make a video for you guys today about a very important credit topic. I know I've been making a few videos on credit, but I wanted to show you guys how to use credit to actually become super rich, make more money, more wealth, but you have to be very careful because it's going to be a double-edged sword. Now, when you're spending money on groceries, when you're spending money for gas, electricity, and other things, you want to make sure that you can pay it on time if you're using credit cards. Now, why is that important if you're paying with credit but you're not paying on time? Well, your score actually goes down. So actually, if you want to get a credit card in the future or more credit, you might not be able to get qualified for substandard rates, especially if your score is around 580 to 669 or poor, which is below 580. And we use Credit Karma, TransUnion, these measurements to actually value credit. If you're over 670, which is really, it is good, it's fair, it's just over fair actually. It's really good because you can actually get maybe standard rates depending on the bank or the financial institution you're working with. So I always advise people to use credit cards or credit and just make sure you pay off on time, because every time you make that payment towards your credit card or your line of credit, your score actually goes up because it shows the financial institution that you're very responsible with credit. So when you're able to get substandard rates, let's say your score is above 740, which is good, very good actually, and if it's over 800, it's exceptional, you would be able to get qualified for substandard rates, obviously depending on the bank and other factors like your income, but you would be able to get substandard rates for the most part. And once you get those substandard rates, let's say for example you're able to get 5% a year, 6% a year, all of a sudden you're basically getting free money. Well, not really free because you're paying this 5 to 6% interest rate, but it's almost as good as free money because you can use that as your leverage in investing in other asset classes. You can use it for real estate, you can use it for mutual funds, you can use it for ETFs, you can use it for stocks, you can use it for crypto. Obviously, make sure you use technical analysis when doing this. If you're doing long-term investing, make sure you're using technical analysis, you're using a longer term time frame. Hopefully in this and the other videos I've talked about that, and I believe I've talked about some things about that, but I will make other videos on that in the future. But just make sure you're using technical analysis when using these strategies, because it could be a double-edged sword. Imagine paying 5 to 6% interest rate at substandard rates, but the market actually crashes, and that's something that you don't want to experience. But then again, this is for savvy investors. I have tried this myself and it has worked. There have been times where obviously it hasn't worked, but I've learned from my mistakes. But I wanted to show you guys that this technique, this strategy can make you a lot of money, but you need to implement 3 things. 1, having a good credit score, which is basically utilizing your credit card. 2, using technical analysis. And 3, making sure you get a good interest rate on credit by being a responsible purchaser and making sure you pay that on time. Make sure you pay your credit card on time, because that's very important to maintain good credit. So once you implement those 3 things and you implement those 3 strategies that I've basically told you about, which mainly is about technical analysis, maintaining the interest rate, and having credit to actually begin with, by having a good credit score, you will become successful in trading or long-term investing. Just make sure, again, I'm going to stress the importance, this could be a double-edged sword. Use technical analysis when using this strategy, and make sure the interest is a good one. Make sure it's not super high, like maybe 25-30%. That's probably crazy. It can even go up to 60% at sometimes, depending if you're going into a private lender. So just be careful of that. Make sure the math works out to your favor so you can make a lot of money. I hope you guys learned a lot in this video. This video is a little bit technical, but it is very important for my savvy investors out there. If you like this content, feel free to subscribe, share it with family and friends who might find value in this video and my other videos. You can check out my playlist as well. Thank you guys, and I'm looking forward to seeing you guys in the webinar about technical analysis, and I might talk about credit there too. So I'll see you soon and see you in my next video. Take care.